Gold just hit a new record high. Spot gold is trading around $4,610 per ounce, up roughly 2.2% in the last 24 hours, with prices pushing above the $4,600 record on safe haven buying and political risk in financial markets. The biggest catalyst overnight was a criminal investigation into Federal Reserve Chair Jerome Powell, which drove fear into credit and equity markets and pushed flows into gold as a protective asset. Now, the next segment will unpack the top 3 market drivers you must watch today. U.S. prosecutors opened a criminal probe into Fed Chair Powell. This is rare. It increases perceived political interference in monetary policy, and markets reacted by pricing risk lower and fueling safe haven demand for gold. Investors around the world, including in the U.S., Europe, and Asia, are repositioning into gold because of this uncertainty. Escalating unrest in Iran and threats of broader conflict lifted safe haven flows. This matters for gold because geopolitical risk increases demand for non-yielding assets when traders fear market instability. Regions particularly sensitive include Europe and Asia, where conflict risk directly affects energy markets and risk premia. The U.S. dollar index softened sharply as traders reassessed rate expectations, partially due to weaker labor data and slower economic signals. Gold, priced in dollars, rises when the dollar weakens because overseas buyers find the metal cheaper and hedge currency risk. If we talk about gold technical levels, immediate support is $4,500. Holding this zone is critical for daily trend bias. Near-term support is $4,450 to $4,480. Buyers defended this band before the breakout. Support below is $4,400. Break below here would signal short-term consolidation. Resistance record zone near $4,600 to $4,630. Gold already pierced this, but it acts as a psychological cap in new highs. Next technical target is $4,650 to $4,700 if momentum extends from safe haven flows. You want to watch the way the price reacts to the $4,500 support in the next 24 hours, because that level is where buyers previously entered aggressively. A reclaim above $4,600 with high volume could signal continuation. A fallback below $4,450 suggests short-term range trading before breakout or breakdown. Directional call for next 24 hours is bullish bias. Target 1 is $4,650 if gold holds above $4,500 and safe haven flows continue. Target 2 is $4,700 to $4,720 if risk premia stay elevated and the dollar remains weak. Directional call for next 7 days is still bullish or range extension. Zone to watch is $4,400 to $4,750. A break below $4,400 opens deeper pullback risk. A break above $4,750 targets a fresh all-time high extension. These actionable steps should watch premium investors. Monitor U.S. economic data releases, CPI, and jobs as they directly impact interest rate expectations. Watch dollar index movement relative to major FX pairs. A rebound in the dollar could pressure gold. Track geopolitical headlines, especially on Middle East developments. See you in the next video. Thanks for watching.